You're welcome to the Economy and Politics Conversation. I'm Ottoabasi, Abasiekong. This edition will be looking at Nigerian Ponzi Schemes, Rethinking Investor Education and Regulations. Recently, Proshare, a specialized financial information hub, published an article titled Nigerian Ponzi Scheme, One Hoax Too Many, Rethinking Investment and Oversight. I have with me to bring insights into this very interesting topic, Mr. Olaoluwa Samuel-Biyi, co-founder Busha, a SEC-registered digital asset platform. It's great to have you on this conversation.
Thank you very much. My pleasure.
Yeah, Ponzi scheme is a very important thing to look at because of the impact it has on savings, investment, and general Nigerians. Your money is important where you put it, and we look at it. Thank you very much. You talked about the article, which you read also, and it's very insightful. So let's begin with this concern. According to the report, between 2016 and 2025, the report from Proshare, we've seen over 200 Ponzi schemes. That is unprecedented, 200 Ponzi schemes. It just makes Nigeria look like a sort of playground for all these Ponzi schemes that is ripping off the savings and investments of Nigerians, which mostly should be hard-earned money. Why is this surge happening, despite the fact that we've seen some efforts around investor education and financial literacy initiatives?
Oh yes, I saw the report, and kudos to you guys. It was very, very comprehensive. And I was quite shocked to find the numbers were at such a level of scale. 200 Ponzi schemes. And I thought it was only a few, 5 or 10, but apparently it's a big thing.
Yeah.
So yeah, I think at the high level, it's a lot of economic desperation. People over the years have sort of struggled to preserve their wealth, to just make a living for themselves. So of course, they're looking for things to do, places to put their money, and some sort of return on investment. And beyond that, Nigerians are generally known to be very, enterprising, go-getting. So a lot of bad actors tend to try to play on that, and it's a large market as well, over 200 million people. So anything you plant here would, you'd get a lot of people, a lot of folks who just want a lot of eyeballs. You can easily get 1,000 or 2,000 people for anything in Nigeria. So Nigeria is, as you said, apparently a massive playground for a lot of illicit actors here. But I think also, when it comes to just things that like just to the discredit of Nigerians, and there's just a lot of also the appetite to get rich quickly, which a lot of folks try to take advantage of as well. And you can see it play out, in the other sectors, from gambling to fraud and all of these things that Nigerians sort of have a reputation for. But I think, it's also again to the credit of Nigerians, many of these people are not, trying to, get into those sort of morally questionable activities, and they're looking for legitimate investments.
Yes.
But because you just have such a large base of players trying to take advantage of them, of course, a lot of people still fall into those schemes. But I'll say those are the general reasons why. Before you go into the secondary reasons, for example, historically weak enforcement around these activities. A lot of folks just come in and play around the space, and they can go out and come in again and over again. So I think, that's starting to change little by little, but over the years, historically, there's been very weak enforcement and consequences for introducing these sort of things into the market. But yeah, I think those are the general reasons that we're
to get rich quick. You wouldn't think that it's something that has to do with Gen Z millennial, but I remember growing up as a child in the 1990s, I was told about a scam based in the South, where if you put, for example, 10,000 naira, you get 20,000 naira. So the same set of people that got 100% quickly, got others, and then the thing folded up, and that was really, really a mess. So it's just a generational challenge that has to be looked at. And when you look at the scale of what has been lost in investment, we talk about 1 trillion naira in over 25 years. That kind of amount, if you add it to the market cap, of, for example, the Nigerian exchange, will really do a lot. I know that it's currently around 65, 66 trillion market cap, and they're even targeting between now and next year if they can make 100 trillion. So just 1 trillion naira means a lot. Now, that shows how it's been inimical to capital formation in Nigeria. What would you be saying in terms of what can be done now to present products, across the capital market? I want to talk of products that can attract a new age of investors. We've seen a lot of innovation, technology from the markets, whether it's the equities that you have the Nigerian Exchange Limited, or whether it's the OTC that you have the NSD, whether you have the fixed income, or you have the FMDQ, commodities, you have the Lagos Commodities and Future Exchange and the FX Private Sector Exchange. What more can we see happen to really attract the young demography who are very eager to invest, to begin to build capital formation, because that's what we need when you look at the scale of, imagine over $1 trillion in 25 years lost.
Yeah. I think what is obvious from that big number is that there's a lot of latent capital just waiting or looking for instruments to deploy into. And, a lot of this capital is not also in size, it's just very broadly distributed. So a lot of people have 20,000, 100,000, 500,000. They just want to put into things and have it work for them. I think we've seen from the traditional financial sector that yield is perhaps very difficult to extract from the market, even if you have pretty safe instruments like the government bills. Intuitively, it's not a thing that individuals think they can just get into. How, if I ask anybody, even the most sophisticated of us, how do you buy treasury bills today? There's no quick answer. You always think you have to have a broker or an institution to engage. So really, we're not meeting the market where it's at, and we're not meeting the people where they want to pretty much aggregate and deploy. And when you look at even the where they already keep their monies, in the wallets and the bank apps, even within those platforms, you don't really have quick access to many of these instruments. So I think it's up to both the regulators and also the industry to come up with more exciting interfaces, first of all, for people to even access these things. I think what we've seen with, digital asset space, especially at Busha is approaching 1 million Nigerian users now, is that, young people especially are looking for fractionalized investments. Where can I put my 100 naira, 200, 500, 5,000? You don't really have to have the big ticket monies before you can get into different categories. And beyond that, they also need to have a lot of regulatory clarity around being able to not feeling like they're doing something bad getting into this space. So if we want to do digital assets, for example, it's not enough to just educate,
which is now captured by the ISA.
ISA, for example. It's not enough to just even educate the people that, hey, the ISA now exists, it's now legal, and you can now trade it. You have to go more to empower them with, okay, now, you can trade it and you can trade it here, and do not trade it here. You have to really pretty much direct them to where things should be done and how things should be done. So I think there's a lot of work to be done across the board. We, platforms like which are already trying to, we already have experience with e-commerce and dealing with these young people. So we do our part with educating the market as well, but also there's a lot of empowerment that needs to follow. We can't really do it alone. We need the government to pretty much, handhold and overtly and openly fraternize with these sort of platforms that are trying to bring innovation into this space. I think even with things like stocks and commodities and gold and FX, FX. There are innovations that can be layered on top of them to make it more attractive to the younger demographics. There are ways to wrap them and fractionalize them and gamify them and offer them in one click with very minimal onboarding processes. A lot of this information that we need to onboard into these instruments already exists in the system through the BVN, through the NIN.
KYC.
Exactly. So all of these things already exist in disparate systems. There must be ways to just allow people who already onboarded into various other systems to just enter this space in one click and exit also seamlessly. We also have to make sure that they trust that the regulators are behind them, for example, to protect them against, overt fraud. And even when if fraud happens, they have some recourse post-fraud that they can rely on. So all of these things need to come into place.
So if I get you right, I know that beyond being a fintech and SEC registered digital asset platform, there are possibilities for you to even collaborate with the Nigerian Exchange Limited and the other exchanges, FMDQ, NSD, just so I can onboard more
instruments.
The category of the market.
Absolutely. The category of digital assets goes beyond crypto. Digital assets in general just encapsulates all traditional assets itself that can be digitalized. So you have in the West, for example, or in advanced markets across Asia. Exchanges like ours that are regulated by the government are able to tokenize traditional instruments like stocks and bonds and commodities, and able to offer the experience the young people are used to in crypto over those type of assets. So those are the entire category of digital assets. So I think the regulatory environment in Nigeria is starting to get more mature. Unfortunately, we've had a massive change in body language around how the government should really approach this industry. And that is why we've gone through a very rigorous process with the SEC to get some sort of regulatory clarity and clearance to operate in the market. We're still in the early stages, but the sky's the limit around what this would mean for the country. Busha is one of 2 exchanges currently regulated, but I'm sure more will come into the fold. But working with the SEC currently, the regulatory burden is severe, such that you can expect that things like CBEX will not survive that process. Absolutely not. We report on a daily basis.
Reporting.
It's very intense. Wallets are blacklisted in a very real-time basis. We work with lots of law enforcement agencies across the country as well, NFIU, EFCC. And so, the principles are local. We're not simply pawns of someone else's game that is in Lebanon or in China. So, if something happens, which is always a possibility, there's the people with passports that can be held accountable. So I think being able to really trust that the government is doing what it can, and feeling a bit more confident around approaching them to ask questions around, okay, is this what I should do and what I shouldn't do? I think would be good for the market. So we're seeing progress, and hopefully it gets better.
Definitely. With Busha experience, you can encourage others to go on and register, because like the Securities and Exchange Commission has said, only registered platforms with SEC should be where you invest. And that is the big message. But when you look at the regulatory collaboration, how would you assess it? Because it's not just Securities and Exchange Commission. A lot has been said about the Corporate Affairs Commission, that once a company registers, there should be that synergy between the CAC, the SEC, the Economic Financial Crimes Commission, and the National Financial Intelligence Unit, NFI, just to ensure that all these schemes, whatever is coming up, are aligned. But the most important thing is that they should be registered with SEC. So do you see that collaboration being effective? Because Nigerians have been reacting with this recent CBX incident that it seems like that synergy is not really effective.
There's been a lot of regulatory depth that the country is trying to iron out now. I think over our first 5 years in operation, Busha is in its 6th year now. It's been a very adversarial relationship with the authorities, and But despite the fact that we've been very, trying to really engage with them, but with the new administration, it was a complete turnaround in the body language and the reasonableness and just a common sense approach to regulation. So unraveling bad regulation is much more difficult than enacting good ones. So it's going to take a bit of time for all of the various stakeholders to really realign. You had a past where you couldn't register a company at the SEC that had, a crypto asset name in the company name. It takes a while for the SEC's process, for the CAC's process to sort of refresh and support the SEC's efforts around regulating the space. The central bank's banking ban affected a lot of regulated or compliant VASPs at the time. And then the banks were fined severely for engaging with VASPs.
Of course.
500 million here, $1 billion there.
Wow.
Even though the central bank, as far back as 2023, has reversed that policy, there's still a bunch of PTSD on the bank side that would take a while for them to get comfortable with that. If I begin to bank the sector, am I still going to get a surprise fine? And then you have the EFCC that is doing its job, going after fraud directly. And of course, they have a lot of issues to iron out as well because they don't have a lot of the tools and the cooperation. So I think now we're seeing a bit more synergy. The NFIU particularly, working with the SEC and the EFCC and the police, the NSA and the central bank. So it's getting better. But there's a lot more that can be done, particularly empowering the primary regulator, which is the SEC, around doing a lot of this, coordination. The ISA has provided legal empowerment now.
Investment and Securities Act
indeed.
2025. Yes.
Exactly, the ISA 2025. But there's still more around, the capacity building within the SEC to be able to successfully do enforcement, data collection, data sharing. Right now, a lot of the information is being gathered by different agencies, but the companies that are being regulated cannot be reporting to several masters. We cannot say of course.
So that data coordination is very important.
Exactly. So I think the SEC has done a lot of the work very quickly over the past year, and I think a lot more support is needed. Just the whole of government approach to support that institution. Just now that we know that the securities market is very critical, just socially and economically.
Very, very critical. Securities market. I mean, I have a boss that says the only place you can make genuine money is when you're in the markets, capital markets. Yeah. So let's look at the public enlightenment, investor education. How do we think it in a way that it's massive, it scales from the elites to the working class to the people on the streets, on the front line, of market women, everyone? How do we bring them? Plus this mass of young people. You're a young market leader, so we need to get more of the millennials and Gen Zs in the market, because like I discussed with the market leader recently, we need to move that age, which is in the investor, the equities market, from 53 down to at least 25, because we're a young population.
Yeah, so I think that education is important. And we've always been very good at the traditional market education. I think, we've always had platforms like Proshare do its job and things like that. But I think more so in this current digital age, there's an opportunity to just dramatize the education a bit better in a way that resonates with the younger people. They are used to more bite-sized education, more content, context relevant education in places like TikTok, Instagram, and done by people that look like them and dress like them and have the same peculiarities that they have. It's very difficult to take lessons from someone who looks like your professor or lecturer from school about your own money. You think like there's just this rebel instinct that is going to be hard to break if you do not just convey that message through venues that they appreciate. So I think just doing a lot more storytelling. I think, for example, the SEC's management did something
recently.
Yeah.
Very interesting.
So went to the market.
Say no to Ponzi, going around.
And that was from the highest levels.
Remarkable, yes.
Absolutely. So seeing the leadership of the primary regulator on the streets in the market saying that, easy gains, is very difficult to achieve. If it looks too good to be true, it's probably too good to be true. These things are things we're not used to. And it's just the responsibility of a lot of stakeholders, from the regulator to the players like ours, just having an open desk for you to ask questions. The SEC currently is very open, where you email them, they respond. If people just simply doing the basic due diligence, asking the SEC via email, is this a legitimate platform? They would have gotten a response to say, perhaps not. It looks like it's too good to be true. 100% a month is super unrealistic. It's most likely a fraud. And also beyond that, we need to really work on the influencers as well that are pushing this.
Who used to push? Some influencers have been pushing some platforms.
It's not their fault. They're looking
they
for.
don't know.
They're looking for. They get paid to push
what's
it.
positive now.
Yeah, so they have to be, held accountable to say, hey, you cannot push an unregulated scheme before you push any investment scheme. Ensure that they have the appropriate licensing from the SEC to pursue that. Otherwise, you are exposed to sanctions as a promoter as well. It goes beyond even the traditional regulators to others like the advertising regulator, ARCON, for example. Before you can get a billboard across Ibadan and Port Harcourt,
you have to ensure it's registered.
You have to be approved by the regulators to do all those things. And these things already exist in the traditional market, in the banking sector, in the telco sector. So, you just need to extend it to all of these Forex, crypto. AI things. Hey, not everybody can it's not an open field and a wild west. And so you have to make sure that if you're engaging an institution that is promoting these instruments, you ask them to present their appropriate licensing that they have to do these things. Already, if you're trying to get digital ads on Facebook and Instagram, they request those things.
Yes.
We need to make sure that happens locally as well.
Yeah, locally. And also the languages. Communicating in languages. I know SEC did something in major different languages, but it should cascade. I'm a Ibibio by tribe, so if I listen to an Ibibio person talking, it has impact on my area and across board. Very, very interesting conversation. In 1 minute, what's the optics for building a market that can accommodate a young demography? Are you optimistic that we're getting it right?
Yeah, I think it's a lot better now than it was in the recent past. I think it's just right now the sky's the limit. I think just globally as well, the body language of the Western regulators and the US and Asia has changed around digital assets in general, where it's very pro the industry. Many of the companies abroad are going public, and Nigerians are, we're already the second most active digital asset market in the world, not even in Africa. Nigeria has the second adoption rate globally, and that extends to other African markets as well. So the appetite is there, the energy is there. So I think with better regulatory clarity, and that was, this was in the market where the government was really clamping down on the space. But now that it's a lot more open and where formalization is starting to happen, I think the sky is the limit, where you're going to see a lot of traditional stakeholders begin to come into the fray: banks, insurance companies offering products that try to secure the space better, auditors beginning to audit players more openly, regulators taking more people into the fold, taxation being extracted from the space. All of these things are going to happen, and that was going to help the industry grow a lot better. So already, we're approaching 1 million users. That could easily be several million
to the market,
exactly over the years. And because we are now capital market operators, technically, having been captured under the ISA, our 1 million users immediately adds to the demography of the capital market in Nigeria.
So you can now have over 2 million and 3 million active users.
Yeah, and our average age
demography changes.
Exactly. Our average age is still 18 to 34.
34.
So that our 1 million brings the market average lower. It's fine for the crypto people to be younger and the traditional people to be older, but it's still the same capital market.
Same capital market.
I'm very sure that the numbers from Busha and the other regulated platforms will begin to reflect publicly in the capital market numbers, and that will show that the government's approach has been right so far.
Very interesting conversation, Mr. Olaoluwa, Samuel-Biyi. The market is where you just make genuine money, and Ponzi schemes are just Ponzi. They give you very, very outrageous returns that at the end, your investments are evaporated. That's not what you want in these times, macroeconomic conditions. You want investments that are real returns on investments. Thank you once again for this conversation. Very interesting to look at Nigerian Ponzi schemes, rethinking investor education and regulations. Great insights from you.
My pleasure. Thank you for having me.
Thank you. And of course, with what you've done, your reference point for other platforms to learn from. What you went through, all the rigors was worth it.
Indeed, it was worth it. Thank you very much.
Thank you once again. And that will be all for this interesting conversation on Nigerian Ponzi schemes, rethinking investor education and regulations. If you want to get further insights on this, you can follow our website, it's displayed on the screen, and our social media platforms to get further insight into this conversation. To come your way again, Ottoabasi, Abasiekong. Thank you for watching, and bye for now.